All right, what's up, guys? I hope you all had a good Christmas. Hope everybody's enjoying a little bit of time off. What I want to talk about in this video is my 5 favorite setups heading into the new year. Before we get jumping into the video, for those of you guys that don't know, some exciting news. My brother and I are moving on over to Simpler Trading. So Focus Trades is going to be joining the Simpler Trading brand here come January, and Chandler and I are going to get in a spot in the options room. So we'll both get a dedicated time slot Monday through Friday every day, trading live with that awesome group. So him and I couldn't be more pumped, and we think this is such a good opportunity to continue our mission, which is providing traders all across the world with value and guidance. And to do so with the Simpler Trading team, I think is an awesome opportunity. So we are pumped. I'll post a couple links in the description of the video for you guys to check us out. And my first day will be January 4th. So we'll be in there soon. So for those of you guys and girls in the Simpler Trading group, looking forward to seeing you this coming week. Or about a week or so from now. Soon enough. So let's get jumping in right in here, guys. My 5 favorite setups for the new year. Keep in mind, I might not trade all of these, and a bit of an obvious statement, but I think an important one, none of these setups could work out. It's just what I'm focusing on. If I think there's a good probability of catching the move I'm looking for, then I'll take action. But as of right now, this is just a focus list. I do have a couple positions in Amazon and NVDA, but for the rest of the names on the list here today that I'm going to cover, no positions just yet, and there's no guarantee I do take a position. But with that being said, let's get jumping in with number 1, Amazon. So our good friend Amazon here has basically been dead since June or July, going into this big weekly squeeze, and this is what I'm focusing on the setup for. I love the structure here of the weekly squeeze. So to give you guys a visual, because all of the setups I'm going to cover are pretty much the same, to give you a visual of what I'm looking for over the next few months, into January, February, March, is for all the energy in these weekly squeezes to finally fire to the upside. So a good example here is PayPal. Much like Amazon spent a couple of months here doing whole bunch of nothing other than chopping inside the weekly squeeze. But once that bullish momentum came in, the weekly squeeze fired, and this thing is off to the races. Another good example is Shopify. Now, I hate trading Shopify because of the spreads, but a good squeeze is a good squeeze. And as far as a weekly one goes, that's a good looking one. So beautiful consolidation, bullish momentum comes in, and the squeeze fires. So with Amazon, in a perfect world, that's the kind of move I'm looking for into January, February, as we approach the first earnings announcement for the year. Is do we begin to get some momentum and slowly but surely start releasing all the energy from the weekly squeeze? So Amazon's an example of a stock right now squeezing pretty much everywhere. We have a good looking weekly squeeze. Now Henry from Simpler Trading, one of his daily focuses is a 3-day squeeze, where every candle is, of course, 3 days of price action. This is a bit new to me, but I am finding it something interesting to focus on. It's kind of in between the weekly and the daily, so to say. So on a 3-day chart, we got a beautiful squeeze here. And for those of you guys using the Squeeze Pro, which you can purchase with the indicator at a nice discount in the description here of the video. But for those of you guys and girls using the Squeeze Pro, we got a nice orange dot squeeze here. It's your tightest form of compression on the 3-day. So you got a good weekly squeeze, you got a 3-day, and we got a daily squeeze here. Now, on top of all that consolidation and all that energy getting built up, we have this big wedge. Now, this can work both ways. Of course, as we're building up energy all over the place, if the wedge begins to break to the downside, we could certainly see a pretty good shift in momentum with the stock dropping lower. Personally, I'd prefer to see Amazon fire to the upside. So a big market-leading name that's been asleep basically since the summer, building up energy everywhere with a beautiful wedge here. So for Amazon, I'm already positioned for that potential move into the Q1 earnings with a couple of put credit spreads here for January expiration. So on the January monthlies, I got a put credit spread a couple of weeks ago, selling the 30.80s, buying the 30.70s, and then on the 22nd here, got a couple more. Got one set at 31.20 by 31.10, and then 30.80 by 30.70. So I'm already positioned selling puts under or near that weekly 21 EMA, not getting too caught up in the day-to-day action, which has basically been non-existent for Amazon, focusing on the structure of the weekly squeeze, and all I can do at this point is kind of hurry up and wait, sit on my hands, and see how things unfold. Of course, this squeeze could fire to the downside. My preference here, guys, is to show up potentially a little bit early, sell those puts while there's still some good premium, versus having to try to chase this thing when and if it gets going. So I'm positioned for Amazon, but heading into the new year, the weekly, the 3-day, the daily, all those different squeezes make Amazon one of my favorite setups. My second favorite setup heading into the new year is AMD. So AMD has a great looking weekly squeeze right now that, unlike PayPal and Shopify, hasn't fired quite yet. But we do have that bullish momentum starting to hit the histogram, which leads me to believe there's a growing probability sometime soon we could see the weekly squeeze fire to the upside. While I'm really interested in an entry right now is more so because of this pullback to the 21 on the daily chart. So maybe AMD continues to sell off. Maybe it does hit the 21 and quickly rebound. Alternatively, it could take a couple of weeks to kind of catch its breath here, as it's going into a brand new daily squeeze. So the previous squeeze, which fired back in November here, is done and over with. We've lost our momentum, and Monday morning will be day 4 of a brand new daily squeeze. So maybe we bounce off the 21 and rip. Maybe the selling pressure continues. Maybe it does a whole bunch of nothing other than chop back and forth as it enters this brand new squeeze. Either way, I'm going to focus on the weekly time frame, and one thing to keep in mind is we're approaching, the new year, is you do have to somewhat at least take into consideration where do Q1 earnings fall. So I'm not quite sure where AMD has earnings yet. It's looking like the last week of January, but you look at different sources, you get different answers. So nonetheless, at least take into consideration where earnings are. But my focus here, guys, is on the weekly squeeze. So earnings aside, what I'm thinking here for AMD is if I can go out to the February monthly expiration, which will require me to sit through earnings, but I think there's a good risk reward here. If we can do a put credit spread, say selling the 85s, buying the 80s on a 10 contract basis, it's a 2-to-1 risk reward ratio. So with the weekly squeeze here, and then of course with that daily chart finally going into a brand new squeeze, I like the idea of selling some puts deep out the money out here at 85, not relying on AMD making a move now, but giving it plenty of time to continue to chop and kind of find its feet, ultimately looking for the weekly squeeze to fire to the upside. So with the pullback on the daily, this is certainly a setup I'm going to pursue here this week, but that's my mindset right now. Give it plenty of time, go with the February monthly expirations, and if I can sell some puts down there 85, I think I like the risk reward, and I'd be pretty comfortable swinging that. So my third favorite setup is NVIDIA on the weekly squeeze, but let me be the first one to say here, if we look at lower time frames in NVIDIA, there's not necessarily anything leading me to believe this thing's going to show signs of strength at the upside anytime soon. No stack moving averages. We're under the 21. Momentum on the daily chart is starting to turn bearish. So nonetheless, not the best setup as far as a daily squeeze looking for immediate strength. But I think if you can give NVIDIA plenty of time and kind of take that slow and steady scaling into a position mentality, I do like the weekly squeeze here. So it's not going to be an exciting trade. Again, one we might have to kind of let continue to chop for weeks on end. But I do like the weekly squeeze getting tighter here. So my mindset is over the next few weeks, see how that daily chart goes, see if things begin to clean up. But I would like to continue to sell some put credit spreads for the week before the first quarter earnings. So if we look here at the chain, guys, I already took one position last week, very small, just kind of dipping my toe in the water, so to say. But we got January 29th, which is the week before earnings. So I'm right now sitting here with one put credit spread where I sold the 517.5s and bought the 512.5s. I'm not really, looking for a move soon. I like the weekly squeeze. I think it could continue to chop for a couple more weeks. But as long as we have the weekly structure here, where we're above our weekly 21, we got the stack moving averages, I'm comfortable selling credit spreads, seeing how this plays out. So it's an incredibly small position right now. I need about 4 or 5 more entries to make it a legit position. But because of that daily chart, I just don't think, anything can happen, of course. But based on the daily here, I don't think it's ready to kind of rip towards 600 anytime soon. So one could argue I'm a little bit early here, but I think that's my preference. So I do like the weekly squeeze. Nothing leading me to believe we should be getting crazy aggressive just now, but I do think one to certainly keep an eye on, and if you're comfortable slowly scaling, I don't think a bad candidate for that potential run into Q1 earnings. Number 4 is Microsoft with a beautiful weekly squeeze. So we're right underneath those all-time highs, which I love, because when we're building up energy for 2, 3, 4 months straight, when we begin to release that energy, if we can crack through that previous brick wall, the all-time high, a lot of times there's nothing stopping the sucker. So I love the structure of the weekly squeeze. Stacked EMAs, we're above the 21, we're above the 8. And last week was your first sign of bullish momentum hitting the weekly. One I think to definitely keep an eye on. Just like Amazon, we have squeezes all over the place. Unlike Amazon, it's actually starting to show some signs of life. So with Microsoft here, you do have a daily squeeze that's in the process of firing. So of course, if the market shows a little bit of weakness in the first week of the new year, probably going to drag Microsoft back down at least a little bit. But nonetheless, this is kind of the domino effect, where as we're sitting here, we're watching that weekly squeeze, which can take, month after month of consolidation before it gets going. The daily chart showing a structure like this, where the squeeze is firing on nice bullish momentum, that can kind of be the kickstart here to get that weekly squeeze going. So with Microsoft, guys, same mindset. Naked calls, call debit spreads, put credit spreads, looking to get positioned here inside the weekly squeeze for a potential move to the upside into the Q1 earnings. So if we look right here on Microsoft, based on the weekly chart, it looks like earnings are going to be the week of February 15th. So you got plenty of time here. My mindset would be, let's just kind of run with that number. Let's say that earnings are, in fact, on February 15th. What I would be doing here, team, is let's go the week out before expiration and structure a put credit spread. And if I can kind of get down near that 210 level, let's see how that's looking right now. 215 by 210. Let's see. So sell the 215, you buy the 210, it's $1.50 a credit, and there's your 2-to-1 risk-reward ratio. So I think that's really solid, and if you structure it like that, of course it's an easy trade if we get that run into the Q1 earnings. If we just kind of continue to chop in this squeeze, well, if you're selling puts down there at 21, 215, 210, I think you still got a pretty good chance here of collecting that premium as long as things hold up all right. So I love the weekly chart, just like Amazon, but unlike Amazon, Microsoft does have a daily chart that's showing signs that she's ready to go here. So I do think one to keep your eyes on. And my fifth favorite setup heading into the new year is Netflix. So Netflix just a couple of weeks ago fired a good-looking daily squeeze. That move is done and over with. You can see the exhaustion here hitting the daily chart, and we got the pull back to the 21. So this little break in the action, so to say, I think is an opportunity to potentially think about working into an entry here in the weekly squeeze. So another weekly squeeze, but I love the structure, very similar to Microsoft. We've been basically in hibernation mode since midsummer, right underneath those all-time highs, just building up crap loads of energy, and at some point you're going to see this energy fire one way or the other. Whether that be to the downside or the upside, time will tell. I would lean towards the upside. So with a great structure here to the weekly squeeze, we don't want to be chasing these setups. That's why kind of using the different time frames here I think is really helpful. We want to get a position in the weekly squeeze, but I think any entry we can get closer to that daily 21 is just better versus trying to chase this. So as the squeeze has kind of come to an end here on the daily time frame, we're getting the nice pullback, the home base, the 21 on our exhaustion. I think we can pursue starting to dip our toe in the water here. So same thing, taking that weekly squeeze, looking for all that energy to potentially start getting released into January, February, into that first quarter earnings announcement. You can go about that and structure it however it makes sense to you. But I think it's a great looking weekly, and kind of like Microsoft here, we do have a daily chart that is starting to show signs of life, where Amazon is just totally asleep at the wheel. But all these setups, guys, are very similar, and all of these setups are going to require a lot of the same characteristics to potentially trade them well. You need to give them time, and you can't get caught up in the day-to-day noise. If you look at Amazon here, it has done nothing that should warrant me exiting my position, because nothing has changed about the weekly squeeze. Now, the stock hasn't exploded and it hasn't ran in my favor, but regardless, it's still in a weekly squeeze. We still have our stack moving averages. We're still above the 21. Sure, if you're looking at that 15-minute chart every day, this thing is ass ugly. But if you're trading the weekly squeeze, I think you should focus on the weekly squeeze. So I think that's an important note. If you're going to pursue these kinds of setups, the AMD, NVDA, Netflix, Microsoft, Amazon, etc. weekly squeezes, focus on that time frame. Meaning, give your trade a month, 2 months till expiration, give it plenty of time to work out, and there's really nothing to gain by watching your 1 to 2 month long swing based on the weekly chart chop around on a 5-minute chart or a 15. So give them time, be patient, and as long as the structure continues to hold up, you got to work those discipline muscles and let the thing continue to ride out. It's not the funnest thing in the world to sit through a total chop fest, and by all means, I wish Amazon was just ripping towards 3,500 here. But it's not it's also not breaking its structure. It's not breaking down. Nothing has changed. It's not fun, but I continue to hold it. So those are my 5 favorite setups heading into the new year. Amazon, NVIDIA, AMD, Microsoft, and Netflix, all weekly squeezes, all could fire to the downside, but I am looking for that upside momentum. So obviously, guys, I'll keep y'all posted. I've already got my full position in Amazon, slowly scaling into NVIDIA, and then as far as AMD, Netflix, and Amazon goes, or AMD, Netflix, and Microsoft goes, plenty of time, plenty of patience. So appreciate you guys for watching. If you haven't already, go ahead and subscribe. And for those of you guys in the Simpler Trading Room, I will see you in about a week. Peace out.